Hey, what's happening, guys? I'm a little bit sick right now, so sorry if my voice isn't as clear. But let's jump into the roadmap and what we're seeing into March and end of year. Uh, I really want to focus this year on sticking. I want to focus on what I know and avoid the times where my edge is not clear. So I trade a lot when it's kind of clear, like when it's like that 55%, 60%, because it has the right risk reward. I used to. I'm really avoiding that this year. I want to take trades, A plus setups only, uh, and do what I know I have edge on. Where if I do this thing over a long period of time, I'm going to make money. You guys haven't seen that much trading from my end the last 8 weeks. One second, let me just answer this person. Hey, I'm recording something real quick for the group. Let me call you back.
Yeah, you're good. Bye.
All right. So looking ahead, about 2 weeks ago, I came in. I'm posting on Twitter as well, saying if we don't get, I told you guys I don't really go as much detail on Twitter. If we don't get that decline, that sharp pullback, and we chop or go higher, it's pushing out the timeline that I mentioned. At the beginning of last year. It's of course these are predictions on Twitter. They look great. I'm trying to make money. I care about making money. I care about taking a trade, getting the meat on the bone for that move. You know, gets the null or I get my target and I'm out. I don't give a fuck if I look good on Twitter. Um, right now, I don't want this year in general. I don't want you guys to think the roadmaps matter that much. It matters what's in front of us, like right now. In the next OPEX, in the next quarter. The roadmap does matter in terms of like the very long-term positions, but we're not at any juncture close to a spot where I'm like loading up on long-term. The last time I had a lot of long-term positions on was October of 2023. Since then, I have barely had long-term positions. It's not something I've had a lot of swing positions, but long-term positions are trades that I know I can sit in. Well, we had Tesla as well. I haven't had a lot of long-term positions. In October 23, I had my entire book was like maxed out on long-term, and I had swings as well though. But we're not going to be in a place where we can have long-term positions until about June, more likely the fall. I'll probably start, around June. Uh, I have a feeling June's gonna the current window of weakness or possible, first domino in this next chapter. I feel like that's gonna get pushed out from what I typically I've seen. Right now, it looks like June, but I think it's gonna get pushed out, just like it did here. Um, what makes everyone get fucked the most? They just, they just make this last as long as possible. It's inevitable almost that we get this end to inflation. How does inflation end? People have less money. They're not willing to pay as much. The market comes down. Real estate comes down. Global tensions are heating up. But hey, Powell's throwing a Hail Mary, and it's in the air at least because, in past cycles, there are instances like this. They don't even get the Hail Mary throw. They get sacked. There's a ball in the air. Can we make inflation last long enough for the economy to grow with it, to catch up? No, the answer is no. They can't. It's a nice attempt. It was like, all right, nice try, but it's not going to work. If it does work, I will be so. It'll be something that's never happened before. This is like 100% of the time kind of thing. Um, the caveat with that 100% of the time point is the timing of it. When does it start? The first domino. Uh, yeah, that's great. If you want to sound good on Twitter, let's try to make some money on this. And that wasn't the top that we just experienced. Uh, let's get into the near term. 6150 is not the top, in my opinion. I don't think this ends, or it doesn't look. By no means does it look like it's ending in the option market. Uh, but it does have a very good chance of shaking the tree down to the bottom of the trunk. They could have a very large, sharp decline. It will take news. I should say it will take news to get that to the bottom of the tree trunk on that shake of the tree. Otherwise, this will be brief. Not it'll be sharp still. Like I think we can get. I don't know at the moment if we can reach the left tail. I'm taking that near term read kind of one step at a time. Like when I have a good read, I'm going to take the trades. Like I didn't do anything all week until we got to the Thursday, I was like, all right, we got a short up here. And I go on Twitter. I'm back on Twitter now, as you've seen. Everyone's bullish. Everyone is posting for a gap up on Monday and all this and that, and they're using jacks and this. There's no momentum above 6,100. Let's use our thinking caps. How many times have we been above 6,100 and seen no momentum? Maybe this stuff matters. Maybe there isn't buyers above 6,100. Maybe the dealer's selling there. So maybe that's where we want to play our shorts. You could have bought the dips the whole time and made a good amount of money too, but it's not a good read for that. It's a good read for volatility, but the dip buying setups came on the back of very exogenous events like the DeepSeek, whatever you want to call that, DeepSeek coming to the public, and it wasn't a clear read. And the guys who bought that dip thought they were, walking on water. They got lucky. There wasn't a clear read that day. I don't think anyone had a lot of edge, trading directionally, long volatility on that move. It was pretty erratic. But yeah, they can pat themselves on the back. It's good to get lucky. You got to get lucky sometimes. But there was, at least for my system, no edge trading that. I think we picked up some stuff around Wednesday, but it just, I want to really focus on when we have a clear setup. I took a lot of, I guess it was like a month ago. I trade a lot in short windows of time. If you're new to the service, welcome new members. You'll come to realize I don't do, you shouldn't be trading every day unless you're a high frequency trading algo. Then, it's part of that's what you do. I'm not a high frequency trading algo. And if I day trade a lot, there's not that many. Trading long volatility is probably the hardest way, and straight delta is probably the hardest way to trade options. And I'm a masochist, so fuck yeah, I love the hardest way to do anything. That's why I picked SPX and straight delta. But yeah, guys, I used to trade every day, and I can do it. It's just not worth it. How much time am I putting into that, and how much reward am I getting? I make money. It's great. Over a year, over the 3-year, 5-year period, I make money trading every day if I want to do that. But I make way more money swing trading, and I make way more money trading specific setups if I'm day trading. Trying to trade every move is a fool's errand. Long volatility, straight delta at least. You should, unless you're short volatility on the tails, that's a different story. What I do, it's a fool's errand. It's not. I shouldn't say fool's errand. It's not worth the risk reward for my time isn't there. Anyway, I've spoken about that stuff. I just kind of reiterating for anyone who's new, who thinks I'm going to be posting, 20 trades a day. Get your fix somewhere else. Go, go outside. Go to the casino. Go play a board game. Don't get your fix from the market. I think it should be showing. This video should be showing my screen here. Let's take a look at the daily here. All right, this is ES. Let's switch this to SPX. Oh, we'll leave ES. It's trading. All right. I'm going to add some time here. All right, so this has been a fun 8 weeks, but this consolidation, this compression and volatility, it's going to end soon. I think it's going to end soon. I don't like using certainty type terms, but from what I'm looking at, this is going to end soon. It's going to end lower. It's going to be fast and sharp, if it happens this week. If it happens after this week, it's gonna be fucking annoying. It's gonna be very fucking annoying. After Friday's move, everyone and their mother thinks it's gonna be COVID 2.0. It's not gonna be COVID 2.0 unless a new COVID breaks out in the next 24 hours. I think I heard over the weekend there was actually something like that came out. Anyway, if that happens, it will be COVID 2.0, but probably would take a couple days to really hit the tape. We don't have positioning anything close to COVID. COVID occurred, and there was no edge. The dealer was not hedged on the tails. Dealers hedged on those deep tails right now. I'm talking like the COVID type move, but I'm talking like the 5,200. But we're not. Let's not. We'll get into that. We'll cross that bridge if we need to. We don't have to right now. Let's put some. See this beautiful TA over here. Oh man. All right. So right now, if we're looking at, actually I'm going to use SPX because they did the adjustment. So we know 6,100 is where we want to be short or just not long. Leave that as red. Left extension. All right, what have we done for the last 8 weeks? Not a lot, but we shorted every time we got to 6,100. We got a couple instances. I think we got about 3 times it came back up there. The one time was slightly below. They were all like 5 to 10x trade offs. If you've been able to sit on your hands during what has been a very choppy period, there were some good moves to the upside. They just didn't occur intraday, really. They occurred overnight. And I had some good reads for calls. I got longs out still. I just don't see. I like being in trades. I'm going to be long where I sleep easy at night knowing that we got a lot of runway. Just going to 6,100 wasn't a lot of runway, and we never had to get all the way back up there. We did every time, and I was consistently. I've been here all day. I might not be posting as much. I'm still here all day, but I'm not posting because there's nothing to post about. I'm waiting to see when we get these pivots, and I'm waiting to see if it happens prior to 6,100. It did happen one time. It was very close. I think it was like 60, 70, 60, 80. But it could have happened earlier. So I'm watching, I'm making sure, monitoring. And every time I just ended up getting back to the magnet. Now, we're going to open up tomorrow. I'd love to. Oh, we're already up 24 points. We should open up with some green. And I'd expect that to be faded. And there's 2 paths that would take. So we're going to open up probably on a pop to we would love a pop to 6,100. 6,100 is a giant magnet overall. It's just not positive. It's not. It's a massive hurdle for the market right now. How do hurdles usually cease to be hurdles? We get weakness or we chop for weeks. And typically we usually get a pullback with this specific setup, and especially how Van is set up. Without getting too technical, we expect the market to go down from 6,100. It has every single time in the past 9 weeks. And it's happened with the same exact read. It's been beautiful. Calls get expensive. Customers are going nuts buying out of the money calls. Dealer is literally just fucking with the volatility on all these contracts. They get like a 30-cent pop on a short move, and then the market does this and craps out after like the first 30 minutes, the first hour. The market makers, things are getting a bit more sophisticated over the past year and a half, 2 years. Obviously, technology is advancing. Their algorithms are getting better. Just understand they're preying on you guys. They're preying on us. The repeated psychology that we all express, how they don't know where your stop is. They know where most of your stops will be. They know what most of you will do. It may seem like it's this all-knowing machine. It fucking is, but it's just because most of you always will do the same thing, and you'll lose. Um, when I mentioned like who's the sucker on this trade, uh, the guys who run Susquehanna, they used to play poker uh, prior to creating Susquehanna. There's a good book, I forget the name, blanking, but you got to always spot the sucker. And when they were doing market making, they really focused on the psycho, like what when those end of day moves happened, and that's one of the days I mentioned it, and we're in those puts on Thursday, and I see them just get decimated I think the market went up 1 point. They just got decimated. They went down like 30, 40 cents. People panic. They sell out of their contracts. They're like, well, I didn't expect that. I didn't want to risk that much. They're sweating. They want to go hang out with their wife without being in fear. Whatnot. They all get out. You think you're in the wrong trade because it's going down so much, but that's a good fuck. If a good deal got better, that's why it is so important that you really know what your edge is. I just see a good deal getting better, and I love when I see stuff like that because I know they're fucking with retail. And if you see your contract go up, vice versa. Usually they're gonna that ain't staying up in the morning, or you better if you're long straight delta overnight and it's going up in the close on not that big of a move, you you just got some premium. You just got some extrinsic value that doesn't really exist. You got value in that contract that's not real yet. You have to hope the market goes up, beyond expected overnight. It probably goes sideways or down. Uh, you got to really be cognizant of what you're thinking. Like when I really believe, like I'm like, wow, this is going to go to up another $20. My retail mind, I'm like, wow, everyone's going to think that. Probably should get the fuck out. I'm going on a complete tangent here, but yeah, we wanted to be short at 6,100. We got up to 6,150. These are levels we've spoken about for such a long time, by the way. They still are very pertinent, but 6,100 is definitely more important. Um, Again, I don't think this is a top. Let's talk about the next week. We got to 60.20. We'll put that down. That was an important spot. What was the low of the day here? We had 60.10. We got 60.10. Put this here. 60.20. I had an annotated chart. It's just a bit messy. I wanted to do it again with you guys. All right, so we got 60.20 here. This is the minimum target for this move. Look, there is a path. It's an outlier right now that was it. It was just that, and we're done. We're going back up. What has to make that path from an outlier to probable? So much has to change in the next like 3 days. When we typically have a setup where a lot of shit that hasn't happened yet has to happen for something to occur, that's the stuff I do not want to trade. But how can we trade this setup with, some context from the roadmap in mind? All right, let's go out. Third Friday in March. 1, 2, 3. This is OPEX. So let's say we get some continued weakness to about 59.50s next up, below 60.20. Why is it not clicking? Let's go 59. Plus or minus 10 points, 59.50s next target. This red. All right, this is where we're heading right now. Short term, probably going to go. We'd love to see you get up here. It's probably going to be more around 60, 70. I'll make a little zone here. This is why I didn't show you my annotated chart, because you're going to see how the organization skills of my charting. Yeah, it works for me. But here we go. Well, I got good organization on the longer term charts, but not on my shorter term. We'll change the color of this. A light red. This is going to be ideal sell zone. We are not buyers, but we're looking to get a pop into Monday. And then we'll go into that move. Get into 6,100. We're very happy campers. We get over 6,100. We are sitting on our hands and making sure that we got the right read. But we got over 6,100, which is possible. We'll put another. It will be 61.20, the same spot as before. I don't think we're going to get up here. I think it's more likely we don't get to 6,100 either, but we'll have to see what tomorrow looks like. All right, so we make this move. Now it's either going to be done here, not the lean, or a very convoluted month where we get a very sharp rally after this. Back to 6,100. We're going to be around this level for a while. You're going to look back at this, end of the year. Not end of the year. End of the year, we're going to be in a completely different spot, in my opinion. But for months, we're going to look back at the chop of 6,100. I said we're going to break out of this because we're going to have a lot more volatility coming up. We're not done with 6,100. We're married to 6,100 for a long time, unless everyone's like world peace has occurred and everyone's happy again. Doesn't sound likely. So we're gonna get this move, sharp decline. If it's really bearish, or we're getting like different. There's like a different read on the book. Right now, I think we get back there, but and we do it around the last week in OPEX or the week after OPEX. If we have a bearish OPEX cycle, the post OPEX week is going to be bullish. It's going to be inverse. So we get this rally. It's short-lived. Everyone's buying hand over fist because it's so strong and everything's so positive sounding. And then we crap out one more time to about 58.50. Now, I mentioned news can hit hard. News can hit here and it will hit the market hard. We get news all the time. We get these tariff things and this and that. It doesn't hit the market because we have good supporting flows. They're hedged. And we're hedged lower than 58.50, but there's a big gap between 58.50 and about 5,600, 5,500. There's another caveat. If we get into there, if we get into here, and we make this entire move in like a day or two, the hedges they do have open below 5,600 that I'm saying, like this is the left tail. There's like a ratio spread open almost where if it happened really fast, like on news, it has to be news or some exogenous event. And this is where we would see it. Like you tend to see more bad shit happen in the windows where there is like I think they always find a narrative, but this narrative will have to be serious if this were to happen in that short of a window. We could get maybe we get the full year retrace of 2024 all the way down to like 5,000, 4,700. My God, everyone would say market top, bear market beginning, it'd be the end of the world. It wouldn't be. It's the best buy ever. It's going to go parabolic after that. We would fucking love to see that. We're gonna get long-term positions on. It's October 2023 on steroids. We are not near a top in the market yet. This is going to end with a bang. The music is still on. They're just taking a breather. If you think we're ending with an 8-week consolidation period, that's not how parties end. They end with a bang. Everyone's going to be having a great time skipping through a field of daisies. And I don't see too many people skipping right now. They're worried that the daisy field even exists. Everyone still is skeptical that we're in a rally. They don't believe that we've been going up. It's unbelievable, but yeah, they're gonna be right for a second. I think these old bears and the naysayers. There's a trade up here. It's a trade. It's not a swing or a long-term position, but we get this move. Maybe we get this just to 58.50. Maybe we just get a little more weakness on Monday. Then I come in and say it's a buy. Whatever weakness we get here, let's talk about whatever weakness we get here. I think it's going to be. I don't know if it's going to be like less than 5% or over 5%, but if it's over 5%, it's probably going to be 10 or 15. If it's over 5%, it's going to go a lot lower. Not going to 6%, it's going to go 15 or 12% or something like that. But on the back of this, if you don't want to work hard, if you want to wait for the crazy time to end, it's a buy. It's going to be a buy. And we just pushed everything out. I had to feel we really had everything pushed out, but I was just hoping that my 2024 or 3 prediction, whatever month I made that, ended up the sliver of hope that March ended up being super bearish. But I've come in many times and said it's very likely this pushes out to June, and I'm telling you right now, it's very likely they push that out again into like the fall or late August. Who gives a fuck? It's going to be a buy on the back of this move. That's what we care about. The only things I care about long-term wise is buying every single dip on gold and loading up more on energy. We have time to do that. It's not important. Energy is more important than metals right now. I have gold on. I have Oxy on, but I want to get into nuclear. There's nuclear's one of the core trade-offs that I was talking about on Twitter. I'm most likely adding it this week. I'm really not like this isn't like I love this spot. I love this long-term trade, and I'm going to average into it. I'm not like I don't track nuclear. I don't have a quad grid up of nuclear energy ETFs. Most of my work is geared towards SPX. It's just like a cycle. This is like the precious metals and energy type trades. It's commodities. It's different work than my typical the stuff you see me posting. But I do trade longer term, work on these cycles for commodities. This has nothing to do with positioning. This has to do with the cycle that we're in. In every inflationary cycle, the ones that are like this scenario, we're going to see a rush to safe havens, and we don't have enough energy. Like I don't know if you've listened to Trump, some of the speeches. We need more energy. There's going to be a big issue with energy once global tensions heat up. There has been an issue with energy since the beginning of the Ukraine war, which we were long energy for. I said, I don't know what's going to happen in 2022, but something's going to fucking happen, and energy's going to go parabolic. And we got an entire war that has not. The war could end with Ukraine. We're still in a cold war with Russia and China, and shit is not getting better. China, I've said this for years, they are playing the long game. They played the long game since COVID. They didn't give everybody money. They don't care that everyone's suffering. They want to beat us. It's very hard to have advancements as a society with everything so polarized. There's no one's walking across the aisle. I've been studying this stuff since college. I used to get drunk, and I talk with my buddies when we come back, and I just say communism's got some benefits, guys. And I used to get flamed in college. I'm like, oh, I love America. I'm just talking cycle, like I'm just talking overall. China's getting shit done. They want to put a high-speed rail. They said, all right, we're going right through your village. Not even going to say sorry. We're just going to do it. In America, we're arguing about who's a better golfer on the largest world stages. Or falling asleep or this, that, and the other. We're not getting anything done. We're fighting each other. The only shit they're getting done is contingency plans for how China might be able to fuck with us. But anyway, the energy is going higher. This is a super cycle for precious metals and energy. This is the core trade that's already on. This isn't the second one, but I will be adding gold. I do think we're going to get a dip here, and again, it's going to be short lived. Gold may be a little bit inverse to the market here. We might get a pop burst. If we get a pop burst, make new highs by about $5-10. My option contract, I'm looking for about $24.50, $25 for next trims. It's a great trade so far. We got in about $4.80, $5. Knock on wood. They expire in I think it's the month after March. April. I think they expire in April. Yep. All right. So I want to get those off the book about 30 days before expiration. That's when the decay is going to really pick up. But they're probably going to be trading intrinsic by then. I want to get my premium out while I paid a premium to buy them. I paid for extrinsic, I don't want to lose that extrinsic. I want to roll it out when they get around 70, 80 delta. Because if, like, just a little side note, if you're, if you're paying for extrinsic value, if you're paying for time value, or the possibility of a move occurring, when you buy the contract and the move occurs and you let it go to 100 delta, yeah, you made a ton of money, but you just lost that imaginary, that volatility that maybe this move happens because it happened, but you had all the time between the 70 delta and the 100 delta to roll it out and preserve that premium. You're just handing them money. The risk is to you over 70 delta. The risk is to the dealer around 20. So we get that pullback. Maybe gold does inverse. I'm going to get trimmed by the high. Still going to hold majority if we get the pop, because I do think gold doesn't need a pullback. I'm a buy on every dip on gold. I want to be long gold. I don't really care about silver as much. Gold is more important right now because we have entire nations that are price agnostic buyers, like India and China. I don't know why. I don't care. They're just buying it. I love that. Was a core trade off before I knew that. Now that I know that, it kind of really narrows me in on which precious metal I like to buy. 1 second. I do want to get long Bitcoin related names pretty soon here, but I do believe we have a similar setup with those Bitcoin related to markets. We're going to get some dip that's either going to take us into it's going to be like a 1 week ordeal or an entire OPEX cycle. I don't have a clear read on that. It's more when does we see this cascade effect almost when we get near these bottoms, like August 5th. I came in that Monday for like 2-3 days. I was coming in like, this looks like a buy. Like it's like I was an idiot. I was like a clapping monkey. It's like, it's a buy, and fucking just keeps dropping. That was an irrational move. That was not based on the option market, but it happened. It was a good deal getting better. It was just a tough one. I should have. I knew to hedge. Everyone, I don't want to. I got PTSD from that still. We waited for the FOMC move, and I said, "This is where I should be hedging, but I'm not going to do it." Anyway, I knew to hedge. We got that at August 5th move. Came in on the Monday morning. It looked like the world was ending. I think VIX was like went parabolic for like a second. Someone fat fingered it, and then it was done. And I came in and I said, if it's not done here, I was seeing a cascade of short. There's a very clear, I guess you could say, signature to a certain player, and it's very clear they're taking the stance that this is the bottom, and then there's a cascade effect almost that happens on the surface because people care about that person. It doesn't really matter who it is. It's a certain signature, and when it happens, there's a cascade effect. And I said, if it's not the bottom here, if that trade, that's like it's fucked. They're shorting volatility on the tails there, and it's not just because it's expensive for the right reasons. Like we're gonna get a multi-standard deviation black swan. That's how you get COVID, the COVID crash. But you always expect that you don't. It's very hard. You don't expect that to ever happen. Look, we did expect COVID to happen, but it had the perfect storm. It was the perfect recipe for disaster. That August 5th move, that's why I was so baffled. I'm like, how is this still going down? It was not the perfect recipe. It was a perfect recipe for a shakeout down to the trunk, the bottom of the trunk. V-up recovery right after. Anyway, there was a cascade effect. That's what I'm trying to mention. Like, I can't tell you where this is going to end on the downside because like COVID, I knew we were going to get something big. Like there was such a large pocket of air. This isn't as big. It could change, but it's really dependent on when we come in and resupply that support. When we resupply, when we alleviate these hurdles too. That's why we can't get I would never buy above 6100 here because it's just you're going against you're fighting the wind. And during that entire time, it wasn't like we were fighting the wind going up, but it's not really windy to the downside either. It's just a mess. It's choppy. Everyone's bored. There's a couple guys who are like saying like they're not getting what they pay for. I'm posting everything I'm doing, and past instances like this, you can look back at like the I don't know 8-week chop in 2023 around 4,200. I'm pretty sure I lost a good amount of money trading that chop because it didn't do anything for 8 weeks, and I was trading all the time. I'm patting myself on the back. I traded this amazing by not trading, and with the trades we did take were all by that 6,100. I took a couple longs. I'm still in some longs. They did phenomenal. Um, if you're complaining, it's because you lost money on your own shit and you're over trading. I mean when I said that I'm really just focusing on what I know, and we're doing some things behind the scenes here that I had to make sure that I'm really dialed in. I'm not taking trades just because I made money on the trade before. And it's play money. Nah, I worked hard for this money. So let's move on beyond April. I'm sorry, guys. I tend to rant a bit, but let's add some extension. All right, so we get this pullback. Maybe it's way bigger. Maybe it's just this. Let me make this let's extend to the right. I don't think it's going all the way down here, but it did the full extension. So we get this pullback, whatever it ends up being. And then we're going to 6,600. Crazy, right? No. What's crazy is you could go to 7,000 on that move. But what I would expect to happen is this. So we get up here by about, let's say 6.2. God, this is such a mess. I'm good at math, not drawing. Let's do this. Why the fuck? Oh, I have it on the wrong setting. Sorry, guys. All right. And we're not going to get this over to the video editor yet, so you guys are going to see how good I am at messing this up. Extend to the left. There's our green target. All right. So, I think even the Jex boys know that we got the 6250, 6300 is a hurdle, but it's really not going to be it's a kind of a hurdle right now. I've seen this stuff a million times. 6250, 6300 is going to turn into a springboard after we get a pullback here. There's another path. Like, let's say we don't get this pullback. The other path I do want to mention that is more probable than just going straight up is we just continue to chop for another 2 months. That would fucking suck. And I know the market likes to make us, be in agonizing pain before it pays us. I will know more context on if that is, it's not an outlier. But it's not probable. The probable path is downside to a very high degree. Since we got short. Now we got downside, and we got the meat on the bone for what I thought was the first move. Now we're going to get a quick retrace that I don't think will last long. It'll be short-lived. It's fleeting, and then we go right back down. And then on that move, we will get a lot of context on how the dealer is going to be either exaggerating it or ending it. Right now, it would get to about 58.50, and then we'd have I would expect some support to come in, but that's right now. That's not if we roll positioning down on the back of weakness. We'll see, because if we get a pop, let's say it's short-lived, that this recovery rally, but it persists till like Wednesday. They might have time to make 58.50 negative, and we get it's like a push and a pull. It's like a wave. You can't build the wave until the water, draws. You gotta go down before we can go up. Because if we just keep trying to knock on this ceiling that exists and not get through it. We got to go lower, and they got to get there. They got to they got to buy back the position. They got to monetize it for that not to exist anymore. Then there's no ceiling above after that happens, and it can move more freely. The push and the pull. So if we get a rally here that persists a bit longer than I expect, that left tail on at least the weekly frame is going to get pushed down to about 57.75. Just mark the 58.50 down. That second level, I'll obviously update on everything I'm talking about as things progress. Volatility is about to expand. That's what we really want to focus on. We've had volatility compression. Volatility is about to expand, and I don't expect it to ever really compress like this for the foreseeable future. But, just keep in mind, if we compress for another 2 months, this week it's about to expand. Then we could go back to compression. If we compress for another 2 months, that is a possibility. We have to keep that in mind as we express these theses on whatever we're trading. So what's a really good way to trade this? If we're saying, hey, it can't go above 6,100 now, but it's going to, by June, that's what we think. I'm looking to do like a calendar, short 6,200 calls or short 6,000 calls, like a 6,000, 6,600 call spread where I'm short the front one. I don't want it to go above 6,000 or 6,100 by the end of March or something like that. But I'm long that call spread for June. Pretty simple. That's the only core trade. There it is. Boom. You got it. We don't need a million positions on to make a lot of money. We just got to pound the table when we think we're right. And that's a great risk reward trade because there's a lot of ways you win. And the way you lose is doing fucking nothing while it goes against you to a degree that's very big. It has to go up 600 points, but you're still hedged. You're just going to lose some money. The delta on the front end is going to move a bit faster by about, 0.08. And it's going to change, rate of change. But you're going to lose just not that much money. But if you're right across time, you could rake in hundreds of dollars on the credit and then make a full 600 on the back. That's the calendars I fucking love to take. There's going to be a lot more long-term core trade ops if this gets exaggerated on the downside, and most likely, the third week in this OPEX cycle or the week following the end of the March OPEX. It's 314 is OPEX, or 321. I'm sorry, is OPEX. And then the week following 321 is going to be a huge buy-op window, not the opposite of a window. It's a window of strength, or it's going to be the week prior to OPEX. It could be the end of this week. I don't think this is going to be that quick unless we get a really sharp move on the back of some news. So I know I've ranted a ton. We're going to get weakness, in my opinion, in the near term. It is not the end. It will look like the end, hopefully. We want everyone in their tinfoil hats and their bunkers. This is not the top. I think we're going to a minimum of 6,600, more likely 7,000, 7,200. When that happens and by what date, at the moment it looks like June. I do believe, I've seen these setups before, it will get pushed out to the fall. There are more there's more seasonality issues coming into play around September. But here's the thing I can't predict. When are we going to get into some bigger fights with the world? Is the world going to heal completely and we're all happy? I don't believe in the latter. I wish that weren't the case. But things usually need to get a lot worse before people are willing to accept change. Things are bad right now. People don't like each other. It's a byproduct of being brainwashed by the polarizing algorithms that know that you'll look at things more that are pretty crazy. Now people don't think that shit's that crazy anymore. They've accepted the idea that there might be a civil war, that we might all do all these things. It's like they're pre-programming you for it to actually happen. You think that many college kids were upset about, the Gaza war? No, they're arresting girls right now they arrested a Chinese woman for inciting violence, she was a spy for China. Their job is to create dysfunction. What's the best way to win a war? Just don't tell them you're in one and make them kill each other. We do the same things, but we're losing on this front right now to China and Russia, mostly China. But again, I'm ranting. When do these tensions heat up? It's going to really it's going to tip the first domino, depending on when it happens. Between the end of spring into fall, it's going to be really hard for me to stay long on a longer term time frame. But you're going to be probably looking at the market and if you don't have longs on, you're going to be sick. It's going to end with a bang, and if that's the window where we think it could end, shit's going to be going crazy. It's going to be going parabolic. It's got to go up so much after a lot of people sell that they get back in. That's like the psychology. Everyone knows that, but they're still going to fuck it up. We're going to make the most money sitting through these moves and not doing a goddamn thing, just sitting on our hands. Less is more. You know how to work is hard. The harder I work sometimes, the more I overanalyze or try to make something happen, I usually fuck up more. The less I work and I focus on what I do know in these major pivots, I'm going to make more money. I'm going to have a happier life because I'm not doing as much work. I did enough work to figure this stuff out. I don't got to work to make it harder on myself and just stroking my ego, thinking I can trade every minor ebb and wiggle. Even if I think I can do that, it's just not worth my time. And we're going to be in long. I'm going to be in longs in that window, and I'm not going to be doing a goddamn thing. And there's going to be guys that missed the move that are sick, and they're going to be like, "When do you get back in?" And that's not. I don't know when I get back. I'm in it. I'm going to be at most rolling up and out or doing calendars. But most likely, the best way I will approach that, I'm already planning how I'm going to trade that move with my partner. It's probably going to be the inverse of that calendar with calls. We're going to be, or not calls, with puts. We're going to be short puts. There's also going to be a great opportunity for a put ratio spread around that time. Because if we get a lot more context on that setup, and it's like a messy setup, where we're not short all of the timing. We want to be in a ratio. If we have a good idea of the timing, we want to be in a calendar where we're short a put spread on the front into June, and then we're long a put spread about 6 months into next year. We have plenty of time to go over that. I know everyone's looking for like a roadmap, like that tweet I posted. This is the major targets this year are going to be 6,600, 7,000, and 7,200. Right now, the minimum is 6,600. I do believe we're going to get the 7,000, 7,200 just because of how these things typically end. There's a fear of missing out. There's unquantifiable degenerate gamblers that will be entering the market. Raise your hand. I'm probably going to be one of them. I'll probably hopefully be in the market by then. But there's going to be a lot of massive degenerate activity when we're going parabolic. And likely at the wrong spots. But that's why they go up so much. Anyway, that's the major targets on the upside. Now, I think that move's going to happen before the end of the year. Just to keep in mind, these are just predictions. Like, it worked last year. Is it going to work again? I think so. These are predictions based off objective information, but this is what I do. But it could change. Things could get pushed out an entire year, depending on what fiscal comes in, fiscal policy. So let's go over. Let's say this drop gets really pronounced and it's very sharp. It's very intense. We go way down. I extended it to the right for the right reason because it's going to happen. And then we go all the way down. We retrace all this move. Trump would love that. Trump would love that because then he gets to yell on the TV about how we had to lower rates and we need to do some more stealth quantitative easing. Maybe we don't do stealth. Maybe we just do some QE at that point because now we got to keep up with China, which is booming while we tank. We're not going to like to see China going up when we're going down. No. We're going to be Trump's not going to like that. Trump's going to be doing tariffs. Trump's going to be doing Trump might do tariffs to get that fucking move because he wants to stimulate everything. He wants the economy to boom. Um, it's it's gonna have one out. It's just gonna create the perfect storm. But we got to get the right ingredients, I guess, and that's one of the ways it happens. It doesn't need to. So like a really sharp, fast decline, everyone probably will be looking at that like, oh, it's so bad. That's the most bullish thing that can happen here because then they can pump money into the market again without having people look too hard at them. What's been happening? This Doge thing. Why do they keep telling you how much money they're saving? Maybe they're about to give us all money, and it'll look less weird. They have a reason to give us all $5,000 or $2,500. Why would they do that? Because they want to fucking pump the market. They want this shit. They want everything to go. Trump loves to pump stocks. He's like, he's long. He's long. He loves America. He loves to pump this baby up. It's gonna end in a fucking very bad way. But hey, dance while the fucking music's on, and he wants to pump it. And if he has a music on and everyone thinks there's a fire in the madhouse, but there isn't one, and we get this massive buyout, it's going to be the best trade op I've probably seen in my entire career. And then on the back of that, it's going to be the second best, or maybe even a better trade op. I don't buy options for that long out, but we're going to enter a very long cycle. Once the next domino falls on this chapter, on the last chapter in this inflationary saga, it's not good. Inflation's a disease, and it only ends with pain. And I don't see too much pain right now, besides from the tinfoil hat crew. But if we get the tinfoil hats excited, we get this sharp move to the downside, and we retrace, 25, 50% on some names that we love, and we're going to get that V-up recovery plus, 400, 600 points above the highs. It's going to really set us up to degen even harder on the 10-year bear market. Now, not 8 to 10-year bear market. A couple of you, I've talked a sidebar with a couple of you guys. Typically, how the cycle goes, the ones I've studied that are very similar to this, it's actually happened pretty much every time. It's about 3 years down, 2 years up, 3 years down. I've only kind of looked at that. It's not like a super long-term roadmap. I looked at that because I'm looking at when I'm going to buy real estate, a ton of real estate. I can't buy in Miami right now. It just doesn't, makes no sense. Terrible trade. Could lose, Miami's a bubble within a bubble, but I could lose. Looks like a bad trade. But yeah, I would be wanting to buy real estate, after that 8 to 10 year window. We are still waiting for the first domino to fall. We're still in the bull run. Everyone is an amazing trader still. Financial advisors rock. They're getting massive returns. Just throwing darts. Everything is fine still. We want it to look like it's not fine for a second. Everything to go to the moon and then go 10 galaxies above the moon because market's not rational. We're going to have irrational exuberance and it's going to go straight up. There's going to be possibly a very good trade-up around what is it? The April OPEX. If we get, let's say this all occurs within the next 3-week window, we go up. Between March and April, we have a parabolic move up. We get to 6,200, and that the first retrace of this move, if this occurs, when and if this occurs, if we get back to 6,100, 6,100 is going to be something we talk about for a while. I think if we get back to 6,100. My God, that is the trade-off of my lifetime so far. Because this first move that we get, if it occurs, if and when it occurs, the options on these tails, these 5 to 10 deltas I like to buy that the market's saying is impossible, they're going to have some volatility in them because everything's going to be going haywire. Buying options at the exact lows is not really a good deal unless you're doing specific strategies. Because even if you're right, volatility is going down, so you're losing money. Unless it's really going up a lot. And you're still losing some money because you're paying a premium just to trade. It's just like the cost of admission to a free game. There's just a guy bullying you. So how do you reduce that? You sell against it. You find what's cheap, and you find what's expensive. What's going to be expensive is going to be shorter duration. What's going to be expensive is 1 month out. That's why April OPEX is going to be very significant. The dealer is going to create some magnets about 1 month out, and then that's going to leave the market, and then we get a sharp pullback to 6100 maybe as it leaves the market, and then we go parabolic again. Resupply, boom, right back to the upside. All right, what if I'm dead wrong? What if this is the top? If this is the top, a lot of different things I would be seeing a lot of different things, and a lot of things need to change. I am here to make money. I'm not here to look good and pat myself on the back and get gold stars on Twitter. And I don't care about Twitter anymore. What you're going to be seeing posted on Twitter is I'm just trading. I'm not even going to be posting. So if you're DMing me in the future on Twitter, just open support tickets if you want to talk to me. It's not any questions and stuff. It's going to be support tickets. I'm not going to be on my Twitter at all. I don't care about Twitter. I care about making money on these moves. So if things change, if I had to change with them, if we're going down and I'm wrong, I'm going to say I'm wrong and it's time to get short. But it's okay because there's going to be so much meat on the bone for that move. Look, I really don't think that's happening here. I think we could get something that checks everybody who we want to fade, all their boxes on the top. It's going to check everything in the loser's playbook on what the top is, which is all the wrong information. And then we're going to buy into that and get a very, very lucrative trade up. There really wasn't a lot of great trade ops last year. There was some great trade ops, but there was only a handful. You had to get into those large pivots. We called every major trade op. I aside from August 5th, and I knew I had it all lined up. If I had got that August 5th one, we had caught every peak and trough. We're about to enter the first major peak, I think, in this year's market. The trough should come around the third week in this OPEX cycle or OPEX, around 314 to 321. And that's going to be a very major trough where we have one of the largest springboards this bull run's seen the entire time, in my opinion. There's a chance it goes straight up. Also would need news that we're doing some sort of stimulus. I think the stimulus comes on the back of pain. In any case, we do expect markets to go higher. Where do we see a null that we need to pivot from this, negative scenario to this is going to go, 6,600 without any weakness. Above 6,200 is null for this thesis. On a daily close. I don't think we're getting above 6,150, but above 6,200 is null. There is room to 6,200 now. If that were to occur, I'm just going to add some not straight delta but lower delta call strategies. I'm not even going to go over those because that's not what I'm trading right now. I have no trades lined up for that scenario until it becomes more likely and we're trading by those levels. I really don't think it's going to occur, at least until we see some weakness. So right now, just focus on. You don't even have to focus on the short. The major trade op on this move is going to be the end of it, the buy. But if you're going to trade the short, we're looking for 6,100, and then I'll move to at least 5,900, 5,850. We will update this step by step. So this first decline, there's a lot of question marks. We're just expecting some weakness. I wish it'd be more specific, but I'm not going to tell you information that I'm guessing about. We knew this was a short up here. How far is it going to go? It really depends on a lot of things I can't see until they happen. But if we get to 5850 and things look good, or if we get news and it gets really far down and we start to see that cascade, no matter what the scenario is, once we get that cascade effect, I'm going max long instantly, max long. I'm gonna redo the video on the risk management, just to reiterate and be really concise. 1 through 6 is now related. It has always been related. It was just easier for that Excel sheet to a max percentage of risk for my total portfolio, my net value. You break the portfolio down to day trading, swing trading, long-term trading. The breakdown could be like 25K day trading, 100K swing, 100K long-term. Why? Because day trading is more risky. If it doesn't work by the end of the day, sometimes it's a zero. Your swings don't go to zero. You want to allocate the appropriate risk for the risk you're taking. If it's a 6, let's just ballpark in here. If it's a 6, like you've denoted a max portfolio risk for any one trade, let's say 3%. So the max you're putting in a 6 risk level, I'll say the max I'm putting in this scenario, if let's say it's a 6 risk, is 3%. Say the trade cost, it's a $3 contract. That means I'm putting 10 contracts max if it's a 100K account for a 6 risk. I will be uploading, I'm going to do the video right after I end this one on just a more concise version of that. You'll be able to, if this sounds confusing, it shouldn't, but if this sounds confusing, it's just the notional value of the trade, not a uniform size across every different notional value. Because, if I'm posting 1x in the past Excel sheet, and I always have explained this, it was just easier to track for you guys because people were getting confused. I don't care if it confuses you. This is the right way to do it. And if I'm trading a $30 SPX contract and you're going into 60 because it's a 6, that's wrong. You should be doing 3% of your total account or whatever your max risk is for your trading. And you can obviously, you're a discretionary trader. You want to pound the table when you're right sometimes and go above that, but you need to have a baseline and something to fall back on when you have to figure out what's going wrong, when you do things when there's like something that clearly needs to be fixed in your trading or a dry spell or something, whatever. Those things are going to get accentuated if you don't have this, but if you do have it, you can stop that from happening because you have information, context, you have a sample that you can look at that's not random. So yeah, guys, the roadmap this year is like not as convoluted as last year, but it's much less convoluted than last year, at least until we go higher. On the back of what I think will be at least a 6,600 move, then we enter the most convoluted market. I've never traded a bear market. I traded a bear month. I traded a bear flash crash. I've never traded a bear market. Most of you probably haven't. Bear markets, from what I've studied, are going to be a fucking playground for this model, for dealer positioning, because no one's going to know how far things can go unless they know what the option service looks like. And things are going to be super irrational for a very long time, even more so than what we're seeing now. I don't even think the market's been irrational. I think it's been very orderly. But we'll talk more about the game plan for the back either 3 months, last quarter of the year, or the last 2 quarters of the year. Q3 and Q4 is going to be a completely different playbook. We're going to be preparing for war, legitimately. Be buying ammo and wheat and energy and metals. I'm going to be in the most boomer portfolio ever. But it's a completely different topic. We'll cross that bridge when and if we get to my targets around the end of Q2. So it's by the end of Q2, we're looking to be well on our way to 6,600 or pretty much completing this move, possibly way higher by the end of Q2, around June. I believe that will get pushed back, but we'll have to play that by ear. That's going to be more of a game time call. We have to see how things progress. There's going to be a good amount of volatility this week, I believe, and I'll be trading more. I'm not holding myself to that. If there's trade opportunities that present themselves that have the right setup, I do believe I'll be trading more. It looks like we're going to have some good setups, but nothing as far as what I'm going to be in besides from those 2 trades I mentioned on nuclear energy and that calendar call. I'm not deviating from the very complicated book I usually keep on by being long Nvidia, being long some coin, being long some MSTR. That's probably it. Maybe I might grab some Amazon this time around. Amazon's got a nice setup, a multi-year setup for a pretty large breakout. If and when markets go up, we're probably going to get, if you've been in Oxy and pulling your hair out for most of the duration of this long, you're probably going to get a very tradable opportunity on energy in the next 3 weeks. I'm not really a big trader of commodities. Like I said, my work that I do use on commodities is longer term cycles. You'll never really see me day trade that stuff. But I know some of you guys do. There's probably going to be a nice long opportunity coming up here. If I do get some signals on some energy reads, I probably would take them on the long side on the weekly. But if we get this dip, and China does participate, that's the other thing I wanted to cover. If we get this dip and China does follow suit, China gets a sharp retrace of this first parabolic move, I definitely want to be long China again. I got out of that trade a bit too early, but it's a name I definitely want to put back on my books. I mentioned that yen trade. When I mention something that I've never seen this signal, it's significant. Like that means something that doesn't have a lot of like a lot of magnets. Basically, has a giant one now that is very clear directionally. I posted that yen YINN. It's a triple leverage China ETF that I've never heard of until I posted that. That read like 2 months ago. It was trading like $20, trading 45 now. 45.70. That's insane. I want to get long that triple leverage ETF that I've never heard of, that I know nothing about because of positioning. I don't care what they do. The position looks phenomenal. And if we get weakness, I want to be long China. I got a lot of random trades on for weakness for the next couple months. They're mostly like low delta lottos. I'm not really going to be putting on anything substantial with time, unless it's like the calendar I mentioned. I'm going to be really picking and choosing my battles, continuing to do the same stuff. I'm selling at 6,100. It would probably happen a bit before. I'm not buying yet at all, even if it just is rallying, unless we get a sustained move. Or I'm not buying unless there's really good deals with time, I should say. I'm not holding myself to any of these. I'm trading what's in front of me. If there's really good deals with like into June, I am bullish into June. I just want to be cautious into the March OPEX. Calendars are your friend here. Another kind of interesting way to position. I've been just sitting here going over different strategies. You really can only do this with SPX, because if you shorten an in the money call on equities, they can just give you the stock whenever they can just put you the stock whenever they want. But if you short a deep in the money call, let's say you short, like, just for argument's sake, like a 5,000 call on SPX, like a month or two out, it's gonna be like 100 delta. And you go long that call for like June, it's gonna be like the same delta, minus like 10 cents probably. You're short 5,000 call for 1 month out. You're long 5,000 call for like 6 months out. It's so deep in the money that they're basically going to be trading in intrinsic. So you're basically paying just like 10 cents, 5 cents or something. I don't know if those are the actual numbers, but I'm saying if you're trading like a 98 delta against a 99 delta, it's not a big difference. Market's like, what are you doing? You're crazy. If that crazy move occurs and the 5,000 call goes to zero, your back end, and your 5,000 call for June goes to 1,600, you're turning 10 cents into 1,600 plus whatever credit you took in. That sounds insane, I know, but that's the trade opportunities you had at COVID. I wasn't that smart yet. I want to be a little bit smarter this time around. This isn't COVID, but I want to be a little bit smarter when we see these windows that have a high propensity to move beyond the expected. This has been a bit of a longer video. I wanted to really go over the different paths. I hope everyone's clear on what I've explained. We have a potential window of weakness here. Don't need weakness. Could be one and done. That's not the lean. We're looking for more weakness. hopefully get a recovery rally to trade that in the near term. Long term, we are bullish into 6,600, 7,000, 7,200. I think it's an outlier, quote unquote, but I think I'm interpreting, these reads, and I know when the interpretations have a higher. I've been interpreting them for a while, so I know what goes wrong and what goes right, and I have a lot of branches from that initial trunk of different what if scenarios that I've seen occur repeatedly. We're probably going higher than 6,600. That's the rational minimum target. I've never seen it go the rational minimum target. It usually goes higher or lower. That's why everyone's losing their mind for August 3rd to August 5th when I'm saying it looks like a buy, because it goes way farther than what is rational. People are panicking both ways. Shorts are panicking, longs are panicking, depends on the direction, but people are emotional and not logical. And that's that. The top we just had, that was very logical, and I didn't see enough emotions. I didn't see the right reads on the option surface, but I'm trying to help you guys out with some good things to look at when you're watching the market. This is not a very emotional top. This is motionless. It's an emotionless top. There's not many tops that are emotionless, especially after, I don't know, a 100-year bull run, whatever it's been, longest bull run in history. It's going to get pretty emotional at the top, in my opinion. It has every time, at least in past instances that are akin to this. All right, guys, I'm going to post this now. Hopefully, everyone was tracking what I'm explaining. What do I have in my notes? The only other trade op that I haven't covered in this video because I'm not sure. It's not a good deal right now, but I'm still looking at the same stuff, Tesla, Nvidia, but I really want to wait on semis. I think semis are the way that this gets like that exogenous, black swan flash crash, because we have China's been possibly invading Taiwan for the past 2 to 3 years. They've been mentioning that, and right now there's some interesting positioning on TSM. I always keep an eye on that, just like the back of my head. I'm just like, not keep an eye on it. And just every time I see it, it makes me think of, China invading Taiwan. That's what's going to go down, and it's going to go down way too much for the wrong reasons. China can invade Taiwan by just stepping foot in their country. There's not going to be a war. It's not going to be anything like a war. They could just say, you're ours out. Taiwan is now China. There's no match. It'll happen in 24 hours. And the companies will still make money, and it's just going to be a very irrational move. All right, guys. For tomorrow, we're looking for a rally. Daily overnight, we get 6,100, 6070. We're going to probably watch the first hour, look to short that first hour rally. If it sustains, that 6070 min probably turns into 6,100. And I don't expect we see the things that need to change on the book in a very short window to make me say, like, yeah, this is done. We're bullish now. But keep an open mind. I am bullish on markets. I am much more bullish on good deals when they appear, and good deals appear when there's, news, exogenous events, people being afraid of things, and that's usually post-news or exogenous events. But yeah, guys, if you're looking for a ton of trades and you're hating the group right now because I'm not trading a bunch, I'm sorry, I don't trade short volatility. This has not been a long volatility setup in the near term. Longer term, it is turning into a very good one. I still have a strangle open for March, and I think that's going to pay. Reed still looks good on that. All right, guys. I did want to mention I'm probably adding to that strangle too, but I do definitely want to size when I'm adding risk to these theses. I think the calendar that I mentioned is much better risk reward, and I can size up on that with peace of mind. All right, guys. Talk soon. Have a great evening.